Namaste, welcome to Arthaniti. Today I want to delve on the topic of NRIs letting out their property in India. Now, people who work in India take up jobs outside the country, to earn better income. Why? Because of the exchange rate parity between the Indian currency and foreign currencies. Correct. So, one of the basic reasons to take up employment outside of the country is to earn higher. Correct. So people who especially go to countries in the Middle East do not intend to stay there all their lives. They intend to stay till their working age, till they have jobs, and then they plan to return back to India. One of the reasons are the visa rules in this country, which do not allow permanent residency. Correct. So such people, what happens is they purchase houses in India so that they have a home to come back to, say after they have finished their job or after at the time of retirement. Yeah, some people have homes which they had bought when they were working in India, and now they have relocated outside the country. There are so many permutations and combinations. Correct. But this video is intended for NRIs who want to rent out their properties in India. Now, there are certain points that you need to ponder upon, that you need to take into consideration if you are planning to do so. See, mostly what happens is when a house remains vacant, unused, the upkeep of the house becomes a major problem. It is very difficult to maintain a property if it is unused and vacant. So, in such cases, many people think of renting out the property so that the money that is received from the rent can be used in the maintenance charges of the property, the municipal taxes, and the upkeep of the property in general. But the rules for NRIs are different. Okay, now before we go on to see the rules which are for NRIs, I want to quickly tell you what happens in case you are a resident Indian and have given out a property or your property on rent. Now, when a resident Indian rents out his or her property, it becomes a source of additional income, a source of passive income. In that case, the tenant, the person who is going to pay us rent, will deduct TDS at the rate of 10%. Listen to what I am saying. At the rate of 10% if the total rent that the tenant is paying exceeds 2,40,000 rupees per year. Correct. So if you as an individual have two properties and you have rented it out to two different people who are giving you a rent which is lower than 2,40,000 rupees per year individually, then no TDS needs to be cut. Okay, now if you have two properties which you have let out to one same person, and that tenant is paying you a rent which is higher than 2,40,000 rupees per year, TDS at the rate of 10% will have to be cut by the tenant, and the remaining amount will be given to you as rent. Understood? Now 10% TDS slab is for people who are eligible for tax audit. If the individual or an HUF is not eligible for tax audit, the TDS slab is 5%, where the monthly rent crosses 50,000 rupees. Right? So these are the rules for resident Indian. Correct? Now, if you are a NRI, you have a property in India which you want to give out on rent. In that case, the limit of 2,40,000 or 50,000 does not apply to you. If you are an NRI and you are earning income by way of rent, the tenant will deduct TDS at 30% plus surcharge, whatever is applicable according to your tax slab, and pay you the remaining amount as rent. Correct? The limit of 2,40,000 and 50,000 is not applicable to NRIs. So, right from rupee 1, whatever is the rent amount that you are earning being an NRI, by way of uh, property that you have let out in India, TDS will be deducted by the tenant at 30% plus surcharge plus cess as is applicable to you, and the remaining amount will be credited to you. Okay, so see, this needs to be taken into consideration if you are planning to rent out a property. Why? Because the rent that you will get in your hand will be way lower than what is decided. Correct? Obviously, you will have to file your returns and claim rebate if you do not fall into that tax bracket, and claim rebate for any excess tax that has been cut and paid. Correct? But this tax will have to be deducted by the tenant. It is the responsibility of the tenant to do so. Now, is there no way out? Well, there is, but it is cumbersome. It is not a simpler option. There are in fact, two ways where you can reduce your taxes or go for nil TDS. Now, the first option is getting a certificate. The first option is getting an exemption certificate from your assessing officer, where you know that your income in India is going to be lower than the tax slab uh, as applicable according to the rules of the income tax pertaining to that year. If your income is lower than the taxable slab of income, then you can apply to your assessing officer and get an exemption certificate, whereby what happens is the tenant will not deduct TDS, or will deduct TDS at a lower rate. Correct? But getting this certificate is not an easy job. You have to be present in person. So you have to be in India for applying this certificate, and it is a cumbersome process. The second option available wherein you can get TDS deduction at a lower rate or nil TDS is if the country that you are residing in has a double tax avoidance agreement with India. Now, many countries, there are more than 90 countries in the world who have this agreement in India. So, in case your income is taxable in the country of your residence, say suppose you are residing in Australia or the USA, then those countries have a double tax avoidance agreement with India. Correct? So, in that case, your income will be taxable in that country and no TDS will be payable in India. Do you understand? So, these are the two ways by which you can reduce or nullify the TDS. But uh, again, finding out about them, and what happens is, if this agreement also is in place, then you have to show proof that you are paying such and such taxes in the country of your residence, which has to be given to the assessing officer of your tax circle in India. So overall, TDS, getting an exemption from that TDS becomes quite a cumbersome process. The only way, easier and simpler way, is to have a deduction for TDS, get your rent after the TDS is deducted, and claim rebate in case you do not fall into the tax slab at which the tax is getting cut. Correct? So the I thought this is a very important point that NRIs should keep in mind when they are letting out their property in India. Again, if you have any queries, please feel free to comment below the video. I will be happy to help you. Subscribe to my YouTube channels for more such informational videos, and happy investing. Stay safe. Goodbye.